we're seeing 5% moves intraday, 5%. It was the biggest recovery since 2008. So this day it went down and then closed higher, and it was the biggest trough to peak recovery since 2008. So when you start setting 14-year records for volatility, something's up. So today is Fed day, and I imagine it's going to be wild and woolly. So you really kind of have to, again, I've just said, you really need to understand your risks and where you get in these things. And, now the ranges expand, and so it's much harder. So the question is, we're getting a gigantic rally in the morning here. And the question is, is the selling over? Is the new bull market back on and on? And, I don't think so, but it's, we've just sold off so much that, it's entirely possible. So I always look at things in terms of pictures, and, there's, usually symmetry to how things evolve. So this is the triple Qs, this is the NASDAQ. And you can see that right at the top here, we put this head and shoulders, and this whole thing effectively became a big top. Then we cut through the neckline, and then we've had this gigantic straight down. And nothing really goes straight down. I always talk about markets in terms of energy, that if I'm looking to go short, what I want is some kind of relief. You don't want to get short right at the bottom here. There's just no relief. You want some kind of relief valve, and then, it can go again. And I imagine now that I've just got this drawn up, I think you're going to see that kind of symmetry where maybe you see something like that, where you've got to kind of now just create a little bit of a, right shoulder here, to kind of, but I don't think this selling is over. I think that this pattern and what I'm looking at, so any kind of relief valve, I would actually look to get back on the horse again. So today is going to be wild and woolly. We're going to open higher. I don't know. Again, I always say, things don't go straight down and then straight up. So, you don't go straight down. Yes, we had this massive key reversal. Now we're going to open higher. And, you don't go straight up in a sustained rally. So, I don't know what they're going to give us today. I don't know that you short into it. This is a very treacherous area. I mean, you've just got, whatever, 440, QQQ points that this could just do this in, this kind of thing. So again, would still be on the lookout for a shorting opportunity. Just, I don't know how long it could, last a couple of days and then, start going back into it. I don't think this low, is the low. One of the things that I've been talking about is the IGV, and this to me, has already, it's underway, but it probably needs a little bit of a breather. And whenever we see these key reversals, makes a new low and then makes a monster new high, typically it indicates there's a bit of a dagger in the sand, likely that there's going to be a bit of a pause down there. And, so, I could well imagine that maybe, but I don't think we come above here. I just think that whatever rally we get, is not going to be long-lived, put it that way. This to me is a monster bear pattern. And to me, it's just, you got to trust the pattern. So when you see a day like today where there's confusion, there's all kinds of ebullience, there's Fed, there's, you got to just trust the pattern. And so to me, this is the governing pattern. And, it's fully, this thing could rally all the way back up here. I wouldn't rule it. I'd actually love to see it. What would that be? Above 370? I'd love to see it. But I don't, so I think this guy right here, whatever this is, It's about just shy of 370. I don't think that this thing can go to above 370. So, if we rally up here, I would just continue. I would short it again. I think that the die has been cast, and we're going to go to 260 on this thing. So it's very difficult to see on days like today, where now the Dow's opening 400 again. It's all back on. The bull market's back on. You're going to hear all kinds of things, and so you got to just keep your eye on the picture. And to me, this is the picture. So the IGV is the tech ETF. It's all tech. Microsoft, Salesforce. Microsoft had earnings last night. Eventually, initially it went down $14 and now it's up like $10. So that's what I tell you about earnings. I played F5, by the way, and made $30 on the downside. FIV. I'm short of 218. I got out of 190. And so, but these earnings plays are all over the place. Microsoft was down 14 and now it's up 10. So, to me, this is what I'm keeping an eye on, is the IGV, because the tech is such a big component of, everything now. The indexes and all the movements are tied and correlated. So you've got the conversion of these two bear patterns. And so once a bear pattern has been made, so once a top has been made, it doesn't just bottom. You don't just top and then bottom. Look, this is an upward trending market, and sometimes you get these sell-offs, and then it goes and makes new highs. And I think a lot of people are thinking, well, that's been the cadence, and that could very well be the case, where you sell off and then you go and look. Anything's possible. I have to open my eyes to that. If we kind of make our way back to the support line and then start making our way through here, and then it starts busting that, then, I'll throw in the towel. But I don't think so. I think that, yes, we could go higher, but I still think we go lower. So you got to keep your eye. We got to a very, pivotal area here where it kind of stopped short. You can see that there's a number of areas where this is a logical little boundary. So that is, I'd say, around the 320, so we're just getting a bounce off that. But frankly, I think it'll be a dead cat bounce.
You can see, 45, it's 1.3 million.
$1.3 million short.
So pop out a profit for 118,000 there.
So you can see how this is going crazy now. You can see how the market's just going nuts.
I bet like $1.6 million on this position. I'm showing right now $23,000 gain.